folks, and welcome to Workplace Procedures. I'm Sahib Alam, and we're following Osborne books during this course. Welcome to Workplace Procedures. These are our objectives for today's lessons. We're going to look at the accounting records and documents and how long they need to be kept for, the regulations relating to them, payments, payroll, code of conduct for the office, health and safety, confidentiality, environmental policies, and working hours. Workplace procedures are designed to ensure the efficiency of an office so that employees follow the instructions, it minimises the chance of mistakes, and it keeps everyone in the office happy normally. Okay, so good working practice for an employee is obviously treating everyone with respect. This will help the team to build a good team, and everyone will be happy in the team. Taking pride in their tasks and following policies and procedures, keeping up to date, renewing their skills, training and CPD. Obviously, things like lateness, their behaviour at work, these things need regulating as well. So we'll look at some procedures relating to that. Good working practice for the employers, treating all their employees with respect and motivating them, arranging training and CPD, ensuring that policies and procedures are followed, ensuring that correct staffing levels. So obviously if you're understaffed, then employees are not going to be happy because they're going to be working really hard and maybe burnt out. On the flip side, if you've got overstaffing, then staff may feel bored and want to leave, feel that they're not valued in their business. Ensuring working hours are not too long, ensuring that workers are adequately paid. Obviously, all these policies will help to an employee. Solvency means the ability to pay debts when they are due. In order to do this, the business must ensure that there is sufficient cash. This is done by monitoring cash flow, e.g. money in and money out. So it's important that the business stays solvent, is able to pay its bills on time. These kind of things are very important to a business, and if it doesn't, then there's a risk that they could go into administration and hurt the employees that work for the business. Working capital. Working capital is money that can be realised very quickly. Minus is money that is due quite quickly as well. So obviously taxes, you have to pay them when due. Any of our suppliers, you might need to pay them very quickly as well. So that's the way that to maximise working capital is to realise that it's realising the money that can be realised quickly and take away the money that needs to be paid over very quickly as well. So the way to maximise working capital working capital, by the way, is capital that is used by the business for its day-to-day trading activities and can be realised very quickly. So it's things like stock, debtors, which you need to pay you, and cash in the bank, and it's taking away stuff like tax, payment of suppliers, which is trade payables, and other short-term like overdraft payments. So anyway, let's move on. Ways to maximise the working capital is to pay in checks very quickly, minimise interest costs. So obviously if you've got overdraft and you want to pay that quite quickly to maximise your working capital. Negotiate long periods with credit suppliers. So if you're a new business, for example, and you've got short amount of cash, then a good way to ensure that you've got enough cash in the business is to negotiate long periods with suppliers. Collect payments from debtors. Obviously, collecting your money quicker will ensure that you've got more cash to pay bills, etc., etc. Accounting regulations. Accounting regulations require that the Companies Act requires that companies, and the same for other businesses, keep the following records: payments and receipts with descriptions to which they relate, assets and liabilities, recording stock. Accounting records must be kept for a period of 6 years plus the current year. Now, obviously, companies kept these records for their financial statements. They keep all these records that go towards making their financial statements, and then for financial statements and the records need to be kept, receipts, etc. They need to be kept for 6 years plus the current year in case the Inland Revenue the tax office wishes to conduct an audit of your documentation. Payroll records. Payroll records are very sensitive and therefore need to be kept accurately, securely, e.g. passwords, authorised persons on the computer, confidentially. So obviously payroll records are very sensitive because people are sensitive about their pay. I mean, people don't like their pay revealed to other employees. People become upset by if someone is paid more than them for doing similar work. Obviously this is not allowed legally, but sometimes people don't realise that, some people might not realise that a person is doing a slightly different job to them, therefore getting a different rate. But people are very guarded and secretive about their pay for a number of reasons, and so this is why it needs to be kept confidentially, so that it doesn't upset other employees in the workplace. Records to be kept: wages sheets and deductions, calculations of wages, income tax and NI details, tax forms P45, payroll returns to HMRC, details of expenses, e.g. fuel. Records must be kept for 3 years plus the current year. A lot of businesses and companies will keep their payroll records for the same amount of time as accounting records. The reason for this is that it's less hassle for them, so they don't have to keep two records that are out of sync. So obviously keeping both of them for the same amount of period means that they're in sync. So that's a reason that some businesses may keep them for the same amount of period as the accounting records. VAT records. Accounting records that must be kept are invoices, credit notes, receipts, purchase, petty cash vouchers, sales and purchase day book, cash book and petty cash book, VAT account in the double entry system. These are all the accounting records that must be kept for tax purposes. VAT return. A VAT return is normally carried out online by a senior manager or an accountant. Lots of businesses would prefer to have a qualified accountant do it, so they might send it off-site. Information that is to be included are sales in the period, VAT charges on sales, purchases in the period, VAT paid on those purchases. We'll get more into these documentations and charges and taxes in subsequent units. But for this unit, this is all you need to know. Authorising procedures. So in businesses, normally a high-level employee or senior-level employee, senior manager, would normally be required to authorise the work of a more junior employee. This is called segregation of duties. It's the purpose of this is that that different employees will do a different part of their overall work, and the reason for this is that there's a check on the work. So the work is and also it reduces the chance of fraud, because if someone else is checking your work, then you'd have to be in collaboration in order to do fraud, because the person that's checking your work, if they're checking it properly, would normally discover any fraudulent transactions, any mistakes, etc., etc. So this is the reason that there's segregation of duties, and segregation of duties is a very important aspect of accounting. So authorization of purchases, signing of purchases by a senior manager, making payments, e.g. signing of checks by the senior manager, back sign nowadays, paying into the bank, signing the paying slip is not done by senior manager. Petty cash payments, signing the petty cash voucher is normally done by a senior manager. Payroll signing and payroll instruction is normally done by a senior manager because of the amounts involved. payroll it needs to be normally a very senior manager, because it normally involves large amounts of money compared to the other expenses of the business. Other procedures. Authorising larger payments may require more than one signature. Payroll may require more than one signature, e.g. a senior manager. In brackets, we've got large amounts, because we know that this is a large cost normally to a business. A VAT return may require a director or another senior manager signature. All employees should follow procedures, and obviously ensure that no shortcuts are taken. Obviously, these procedures are put in place to make sure that the business is run efficiently, that there's reduces the chance of fraud, and it ensures that there's check on work, so that there's no errors that go through. And this is the reason for these procedures. These procedures may sound and seem like they would be inefficient for the business, because the work is being repeated, but actually it's the reverse that is true, because if the mistakes are made, then they need reversing, and reversing mistakes takes forever. As someone who knows and has reversed mistakes of employees, it's a more of a hassle to reverse mistakes than getting it right the first time. Other policies and procedures. Code of conduct. So drugs and alcohol policy use, use of internet, email, mobile phones. For example, if you're sitting in the office on Facebook all day, your workplace is not going to be very happy, your boss is not going to be very happy. Health and safety, obviously all employees should be following health and safety, reporting accidents, keeping everyone safe in the business, keeping visitors safe, signing in, etc. So that people know when there's a fire, how many people are in the building. There's a vast amount of health and safety laws and procedures, and employees should have basic knowledge of this. Confidentiality is keeping sensitive information safe. Obviously we know about payroll. We don't want that information getting to anyone. How the business is doing financially, that information should be kept a secret, because competition may use it. Obviously the taxman needs that information, so that it's not. There are the confidentiality does have clauses. There are people, like if you are legally obliged to disclose, then you should. Also, most businesses would like their bank to reveal their financial information, normally to trading partners, for example suppliers, in order to gain credit, or gain a mortgage, or for various reasons. Environmental green policies, obviously these are becoming more and more important. Sustainability, keeping the business sustainable, having environmental policies normally make sure employees more happy, and your customers, they want to see that you're looking after them and the environment, and you're basically an ethical employer. Confidentiality. We've been through this a number of times. So keeping sensitive information, e.g. salary, HR, finance, shouldn't be revealed to anyone apart from only authorised personnel. So obviously the HR manager, the finance manager, some senior directors would usually have this access to this information, but not very many others. For example, the marketing director would need to know the salary information of most staff. So it's only job related. So if your job is in this area, then you should have access. No one else should, and you shouldn't be discussing it with anyone. Data Protection Act applies to files held on the computer, e.g. manual records. Personal data must be kept secure and accurate, kept as long as necessary and no more, kept securely. So these are the provisions of the Health and Safety Act in summarised form. And so we basically need to keep the information secure and not reveal it. It should not be revealed to anyone without prior permission.